Hey, what's going on? New week. Today's Saturday, March 16th. So, hope everybody had a successful and profitable week last week. I myself, not as profitable as I could have been. I will get into that shortly. Actually, what I have pulled up here is the Russell Futures Index. This is mini, I believe. Yeah, the E mini Russell Index. So this is an asset that I haven't really done too much on. I recently started just doing some back testing on and forward testing just to kind of revise my trading plan. So looking at that. So last week we closed below this fair value gap. But just my expectancy for the week open and the weekly draw, I'm looking at basically a drawback up here, and in my initial draw on liquidity based on a daily time frame is going to be back inside this bearish candle. Um, I'm not at the educational level to where I could share my thoughts and processes. I would just simply say this to you. Typically, one of the things that I've noticed, and then I'll show you this in a couple of examples. And yes, it's hindsight, but hindsight could be very instrumental in this. Whenever you actually have like a high that's put in, like a bullish high, whenever you get obviously the bearish candle that finishes off creating and making this high, there is not always, but usually there is like a bearish, or excuse me, a bullish candle that follows. Um, just within the context of how market's delivering. So if you look back here, this, and it's a lower high, but it is a high nonetheless. You have a bullish, bearish, and then you've got a bullish. And if you notice, when you get the bearish highs, which ultimately do kind of support the narrative of bearish order blocks, um, or a bearish engulfing, if you will, like these two candles would engulf, it usually just falls off precipitously after that. But that's just like my short level. Here's another high. As you see, I'm not trying to hide anything from you. So this is a relative high. This is the bearish. That's a little bit of a bullish. So like I said, just back testing the process, and then just looking at this. So yeah, under that context, I would be looking basically for an initial draw on liquidity back into this level, starting next week. Um, Weekly draw on liquidity is a little. I wouldn't say that's far fetched because the market here is showing longs or bullish intent. So I would anticipate there's not been a market structure shift or anything like that. We're sitting on a weekly time frame, so weekly delivery still tells me that it's going long. All right, so that's my project. That's the project kit. So mini Nasdaq. I got to get this cleaned up a little bit. So if you go back and you watch my weekly bias or my weekly outlook from last week we actually had this liquidity targeted. I think I was actually on a 15 minute. Let me drop down to a 15 minute really quick and see if that's a little bit more clear. It's a little bit more noisy, but it will be clear. I'll let me see if I can navigate this for you. So I believe I actually had, and as you can see, I annotate during the week as I go in my training. So don't judge me, okay? I'll get it cleaned up by tomorrow. But yeah, the narrative we were basically, uh, that's Monday, the 4th, the 7th, Friday the 8th. So we basically started the week here, right? We started the week back in here, right here, and I have this set to regular trade hours, so that's why you see the gaps. But I'll try to keep this weekly outlook short. I've been doing pretty good about that. So we started a week here at this weekly. We did move back down, which would have given an indication that we were going to hit the draw on liquidity quick. And my supposition, and I know this would be retrospect or hindsight, but The expectation could have been if we saw this draw on liquidity taken out early, and this was Monday. So this was Monday low that was held until yesterday, actually. Was it yesterday or Thursday? Yesterday. So if the I guess you could say the low of the presumed week up through Thursday, if this had violated the draw on liquidity, then I would have absolutely been looking for longs. I would have been looking for higher price, like right off the gate. We did actually get the move back up that just barely tapped this hourly fair value gap long, which presumably could be, and we'll get to what my supposition or what my draw is this week. But we did move into what looked like us tapping into this hourly fair value gap, which legitimately actually we did, and it was barely a tap, and then there was basically that run back down. So long and the short, like our narrative for drawing liquidity was actually met. That was met on Friday. The low of the week was also taken out on Friday. So as you can see, I have another draw on liquidity down here. Um, you can't really see that because I got my stand in the way here, so sorry about that. But for the upcoming week, just because it's a smaller zone and because I still have regular trade hours on, I'm actually looking, that is February the 20th. This is really the level that I would be looking at. So this regular trade hour, this Wednesday, the 21st of February, that's a 4 p.m. close. So that's a New York PM session close. This area has yet to be tapped into and mitigated. So I am not suggesting that when market opens on Sunday, excuse me, or even Monday, that we immediately run to this side. Um, my personal opinion is kind of sort of what happened in reverse of this week, meaning I would almost anticipate market open to kind of run long because we've taken liquidity down here. We've taken some form of sell side liquidity. The other portion and the other aspect of me thinking that price will continue maybe just a short term long is because I don't know if I really want to get into this in this overview video, but I'll just say this way: the lunch hour on Friday, and Friday operates different in terms of delivery and in terms of liquidity. It operates differently from Monday through Thursday, especially when they're news drivers and especially when you've got red folder events, FOMC, things like that, CPI, like whatever it is. It's sometimes going to engineer, trying to choose my words properly here. Um, there is a defined value or range in which the market's going to be reaching for certain liquidity spaces, pockets, uh, vacuums to be contained prior to um, red folder, like major red folder news, FOMC meetings, rate adjustment, NFP, like things like that. It's one of the reasons why you'll get like a concise range, and ultimately, if whomever the composite operators are looking to run on a certain pool or run to a certain side. We see what happened like a couple of weeks ago where we had like the massive runs up and down prior to basically a CPI event, which typically you would look at like prior to a CPI event, you're looking for those controlled, concise, and then you're within a defined range that just won't, for whatever reason, move until like that CPI event or FOMC. We got quite the contrary, which kind of, I don't know. I'm not a smart guy. I would just like to think that I see some things sometimes where when you get runs like that, that just kind of indicates, okay, you're looking for a specific market condition or specific price and time area under which when the report does come out, when the testimony is, conveyed and people hear it, then you're able to run on those certain spots of liquidity based upon where you've been able to move and negotiate price back into where it's in your favor. So initially, as I'm saying, I would look for this initial price to move back into zone, especially since we've taken liquidity that was already down here by virtue of it being a previous Monday low. So that was a weekly low level that had been swept out. So an initial retracement, if you will, long, but a continued move back to that February Wednesday, February the 21st, 4 p.m. New York session close. So I have my draw on liquidity a little bit higher than that. Um, I have it basically, I'm looking at, that is Tuesday the 20th, and that's also a close as well. So there's a Tuesday and a Wednesday. So it's the 20th and the 21st of Wednesday. So I'm just looking at that as regular trade hours. That's something that will be open. We should, don't know, especially with news next week. That's an area that I would be looking at. And no, I don't trade the news. If I do, I usually do it out of like paper trade or something like that. Because at the end of the day, I just kind of want to preserve my capital. I don't necessarily want to set fire to it. Even if I think that my bias is correct or I'm in line with composite operators, like it's not worth it. My pockets are not that kind of deep. Um so yeah, so just again looking at the expansion. Let me get my annotations and stuff off of here so we just look at the candles um really quick. And I believe this video this week is already longer than last week. How about that? So yeah, there and again, we have a high basically that's been put in. So again, I would look for maybe an initial move back into and then potentially away. But we'll see how the weekly plays out. But yeah, there and again, that's going to be my bias. I'll be short. So hope you guys get some value out of this. Like, subscribe. I don't know honestly how I'm gonna work live streams back into my content. I've just been doing a lot of focusing on the Top Step combines. I'll kind of give you guys an update come next week. I'm trying to sort a couple of things out because I realized very quickly how ridiculously dumb it was to try to do three combines essentially at the same time, trading two different strategies. So that's one of the reasons why I said not as profitable. I'm still up in the accounts, but I think that just kind of spreading myself too thin. Two of the three, I actually have one on a copier, so whatever I take in one, I'll get in the other. And in that third combine, I was just trading macros. That is some of the content that you saw from this previous week, and then I realized like how timely that is because I didn't want to take like the morning macros and have like a 4+ hour live session to cover basically the 950 to 1010 and the 1050 to 1110 macro where it's too much. So I did one for the 950, and then I did another one for, was it 950 1050. I did one for 1050, and I did one. No, that's right. One for the 950, one for the 1050 macro hours, and then I kind of passed because there wasn't a whole lot that was going on that particular day. So if you haven't seen those videos, I'll try to leave a card in here for you to be able to go check that out. And if not, I'll leave a video description in the description link below. So again, thanks for the support. I'll be on the community tab. I'll let you know if I got another live coming out, and I'll see you guys then. Any questions, leave them below. Comments, leave them below, and I'll be sure to respond to you. Thanks again. Take care.